Are you importing goods from China or other foreign locations for your Amazon store or other e-commerce store? Not sure if you need to insure your goods when they're shipped via air or ocean freight? Is it cheaper to buy coverage through your freight forwarder or have it on your own? Curious as to what it costs to buy shipping insurance? I'm going to answer these questions and a whole lot more coming right up. Hi, I'm Gordon Coyle. Welcome to my channel where we talk about the risk and insurance issues on the minds of business owners. And in this video, I'm going to talk about how, why, and how much it costs to getting insurance on the goods you're shipping from China or other foreign locations back here to the United States. So let's start with why you should have insurance on your goods once they leave the factory in China or elsewhere. The main reason is that regardless of how they are shipped, there are often claims resulting from damages or theft that do occur. Now, if you're a small business shipping very small parcels via FedEx or DHL or UPS, then you probably don't need insurance because those values are pretty low per shipment and you could easily absorb the claim out of pocket. But if you're shipping hundreds of thousands of dollars of goods or more in value via containers, then having insurance makes sense. You don't want to pay out of pocket for a large claim if goods arrive damaged, wet, or if they're lost at sea. Now, you may be thinking, lost at sea? Damaged goods? Shipped in a steel container? That's nonsense. Unfortunately, it's not. Containers do go overboard, and in some instances are actually thrown overboard by the ship's captain to save a voyage that's at risk of sinking. In addition, there have been notable cargo ships lost entirely at sea over the past few years where thousands of containers go down with the ship. But even if your container doesn't go overboard, we have settled dozens of claims relative to water-damaged goods, theft of goods, and broken and damaged goods from inside the container. Remember, you've paid those goods in full to the manufacturer before the voyage begins, so any loss that happens is on you, and if the container is lost, that's a total loss out of your pocket. In addition, there's something called general average, which is a shipping term used and it's accepted internationally, which basically says that if one or more of the interests or owners of goods on board a ship suffers a claim because the captain of the vessel cast the containers overboard to save the voyage, known as a voluntary sacrifice, then all the other interests or owners of goods aboard that vessel will proportionally share in that loss. This is a risk you have even if your goods make it to your warehouse undamaged. And if you rely on your freight forwarder's coverage, you'll be surprised that it does not include coverage for this general average thing. Like a lot of business insurance issues, you've got to ask yourself, is it better to trade a few dollars today in premium for transferring the big risk of losing a huge amount of money if your goods are lost, damaged, or destroyed? It only takes one claim to erase dozens of years of premiums to make it worth it, and we'll focus on that in a minute. How do you get cargo insurance? There are two predominant ways. You can bundle it with your other charges that your freight forwarder or shipping line charges you, or you can buy it on your own. So let's look at those differences. If you buy insurance from the freight forwarder or from the shipper, you're likely going to get very limited coverage and overpaying for it. I say limited because the forwarder or shipper's policy typically covers you for claims for their negligence, which means if your damages are not their fault, the policy isn't going to pay. In addition, the forwarder's policy may not protect your goods once they're off-boarded from the ship. That means when your goods are trucked to your warehouse or stored in a warehouse, they may not be protected under that policy. Insuring your goods on your own policy gives you the ability to customize protection to cover them from the moment they leave the dock in China or anywhere else until they arrive at your warehouse, and even while in your warehouse and beyond to your customer's warehouse. You can get your own cargo policy from an insurance broker like me who specializes in this area of insurance and who represents the top insurers of cargo coverage. Using an expert broker gives you more options and advice than going direct to just one insurer. So, what does it cost? When you purchase insurance from a shipping line, you'll pay about 0.5 percentage point on the value of those goods. So as an example, if you shipped $100,000 worth of goods, your CIF premium would be $500 on that voyage. If you had 10 voyages that year, you'll end up paying about $5,000 for the year in shipping costs. If you had the same $100,000 worth of goods crossing the ocean 10 times in a year and you had your own ocean cargo policy, you would likely pay an annual premium of about $4,500. So slightly less, but for much better protection, which you can customize to fit your needs and not the shipper's needs. Here's the bottom line. I always tell my clients that they should be in control of their insurance and not leave it up to another party where you put yourself at risk and get inferior coverage terms and possibly overpay for it. Now, I'll give you an exception. If you only do a few shipments a year, or you're just starting out and you don't know what your shipping exposures are going to look like, then buying coverage through the forwarder or the shipping line may be a good option. Then, when you get a higher volume, I'd suggest buying your own policy. When it comes down to business insurance, doing it the easy way may not necessarily be the best way. And the last thing you want to do is jeopardize your cash flow and business by making a mistake here. It pays to work with an expert who's been through this dozens and dozens of times to help you make more informed decisions protecting your goods on the water or in the air, and once they've landed in your warehouse. In addition, we insure a lot of companies for importing goods from China for product liability, product recall coverage, and more. So if you're looking for an insurance broker to talk to about your situation, I'd love to hear from you. My contact info is in the description box below. And I'll promise you one thing if we do connect. No high pressure sales nonsense. Just a conversation to see if we're a good fit for you and your business insurance needs. Thanks for watching, and if you found this helpful, do me a favor and hit that like button and subscribe. Thanks.